Hi guys, Happy New Year and welcome to our market insights. Now it's just two parts and this is the overall macro outlook and we'll look back a little bit at what happened just towards the end of last year. So let's get on with it. Okay, so first of all, last week, Friday, NFP was higher. To me that was obvious, and I did post that on LinkedIn. And that was due to, first of all, ADP. And of course, that's not guaranteed that just because ADP is higher that NFP will be, because sometimes they can diverge quite a bit. But for me, it was all about the seasonal hires, sort of Thanksgiving, Christmas time. So all of that would have been included in my mind. So, it didn't surprise me at all that the number was higher. And I think it's going to really take possibly until around the March data comes out before we're going to see any real accurate outlook for the job situation in the US. Okay, and then of course, 2024, what to expect? So for me, I expect this year to bring a few surprises for sure. Unfortunately, I think that these will be driven geopolitically. There's still lots of tension out there between nations, and I could see that possibly increasing and spreading as well. So if we look at what's going on at the moment, obviously Russia, Ukraine, and I think, the way things are going at the moment, there seems to be that little bit of an impasse. I think it may come down to supplies at the end, to sort of the outcome of that war, as opposed to strategy. Just who can access the most weapons, because they're certainly still firing a lot at each other. And then, of course, there's the Israel-Hamas situation. Israel's been, leveling parts of Gaza, I would say, from news that's coming out. As long as you can believe that, of course. Yeah, I mean, obviously not a good situation at all. But in the Red Sea, it's causing problems as well. So, we're going to look at that a little bit more. But and then for me, it's not a war, but it is a competition between the US and China. It's an economic war, it's a tech war. There is friction there. So, what's going to be the outcome of that this year? US is still strong in my mind economically. China's still struggling. The potential, if you look back probably even a couple of years, it looked as though China, or even pre-COVID, that China was really sort of getting closer and closer to the US economy. But they've certainly taken a step back in the last year. Okay, so what else should we expect? Yes, interest rates. So, yep, of course we expect them to drop this year. But for me, slowly. I think everyone's really getting ahead of themselves, of how much they're expecting these rates to come down and how quickly. So for me, I think the ECB is going to be the first, followed by the Bank of England, and that's probably, sort of possibly the end of Q1, before the end of the first half of the year they will start their rate cuts, just because the economy is not strong. So it's a matter of if they blink and whether they are willing to accept inflation just that little bit higher than they'd like to see it, but to stave off a real full-blown recession that could come. For me, the Fed, they're in a much stronger, better position in the US. So, and obviously the data still supporting that. So it could easily be sort of May, June time at the earliest before you see a rate cut from the Fed. Of course, just remember, this is just my views. Then, okay, if we go back to the ECB, as I mentioned, it's possible that they could panic because of their weak economy. And, just look at Germany. I mean, usually the strongest of all the nations in the EU. At the moment, they're the weakest. And of course, that puts a little bit of pressure on to possibly to cut some rates. How much do I see in the rate of cuts this year? I think that you could see from the ECB, as long as inflation doesn't fly up again, I think you could possibly see 1 to 1.5 basis points from the EU. So ECB. So you're going to get 25, 25, 25, 25, and then it's just a matter of as they're feeding into the economy, whether they need to do any more. But I mean, rates 4%. I can see them below 3% potentially by the end of this year. Bank of England, I expect them probably to cut by about the same amount. Obviously, they're a percentage point higher. They're at 5, so I think maybe they'll get down below 4. Same thing. I mean, the UK economy is not doing bad, but it's not great. And obviously, manufacturing is pretty sort of down all around the world. There's very few countries that are actually performing well there. And of course, again this year, keep your eye on India because their growth has been pretty much under the radar, but they're doing really well as a country. And then, okay, so for the Fed, what do I expect from them? I'm going to be honest with you. I think we're only going to see 3 rate cuts this year from the Fed. There's this fear factor about inflation and whether it could pop again. And with all these geopolitical situations going on, you've got the Red Sea issue, and then of course the Panama Canal as well. So, I'm just going to say about them because water levels, attacks, etc., etc. And of course, what that can do is that can sort of delay or cause real serious shipping issues. And it's possible for that to become a major issue again. Now, another point is this year there are over 40 national elections going on. It's huge. And of course, again, that could actually sort of complicate things even more. It's just really going to, whether there's any populist votes going in, or whether they'll actually be just re-elected. I don't know. I mean, obviously each country's got their own problems. I'm in the UK and we've certainly got political problems here for sure. And of course one of the last elections this year is going to be the US election in November, and it's looking like it's going to be a rerun of Biden versus Trump. In Europe, they do look likely to enter a recession. If you just look at sort of last year's rates, all these hikes from last year, they still haven't fed all the way into the economies. So, you potentially you could see, central banks cutting before even the full impact of all the hikes have actually hit the economies, which is going to be interesting. But I think as long as inflation permits that, the rate cuts will come just at a slower pace than what everyone's expecting. At the moment, US is still on sort of track for their soft landing. Even Yellen's sort of commenting on this now as well. And again, why is that? And I think it's due mainly to the amount of stimulus that they added during COVID, and that's sort of keeping households in a stronger position, especially against Europe. And then inflation. So yeah, inflation's been moving lower. However, these supply chain issues, they could just resurface. Again, as I mentioned, that shipping disruption in the Red Sea because of the Houthi attacking the ships there. Hopefully that's going to be resolved by more and more warships being there to monitor that. And then when you come to that Panama Canal, the water levels, they're sort of pretty much at summer levels, even though it's winter. And of course that means that they may have to limit the amount of ships that are going through there. Again, that could be a little bit of a situation to watch. You know, I mean, you look at all these sort of shortcuts between these waterways and all that. I mean, you know, you've got trillions of dollars of supplies that use them, and having to go around, say, you know, the south areas of Africa and all that sort of, you know, that can add up to another 30 days on to travel, and of course that's going to be an added expense as well. So, you know, it's something definitely to watch. And of course, that sort of potential to disrupt supplies is coming back. Okay, so stocks had a bad week to the year. I finished sort of mid-range on Friday on the day, but you know, there is pressure there at the moment. But of course, just remember we're coming into earnings reporting now. So again, we're going to have to wait and see whether stocks and companies have performed, especially sort of with the Christmas period. Uh, Oil's sort of being driven more by supply risks. You know, a lot more than sort of what OPEC managed last year, actually. But you know, possibly there's going to be some delivery risks moving forward. So, you know, if you trade in oil, and again, you know, oil is one of those things that impacts the economy as well as impacted by the economy. Uh, Gold has just been volatile. And you know, I can't see that changing this year. I mean, it's not really sort of following any correlations at the moment. It's just having some volatile moves. And then, of course, we've got what I consider to be digital gold at the moment, which is Bitcoin. And of course, that had a big rally in Q4 last year. You know, it's possible in this month, January, that we'll get that first BTC ETF approved in the US, you know, and that's due sort of within days unless they postpone it again. And of course, this year, 2024, is another year for a Bitcoin halving as well. And again, so that's going to reduce the amount of new coins that are mined. So that's sort of pretty much it for the macro at the moment. Obviously, be adding more on a weekly basis as things start to pan out and become a little bit more obvious. I hope you enjoyed that, and all I can do is wish you the very best of luck for 2024, and I hope you keep coming back to listen to my outlook and my chart analysis. Take care, and of course, be lucky. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. You know, we're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, you know, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Cymax FinTech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one. Trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well.
We do offer 1 week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, you know, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging, FX and commodity exposure. And then of course we provide you know, a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, you know, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@cymaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@cymaxfintech. Sorry, go back to that one, christubby@cymax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.